Hello everyone. Welcome to a continued session of final accounts of non-trading concern. In this video, I focus on the treatment of revenue and capital items. Why such differentiation between the capital and revenue items? Because revenue items are the items to be shown in the revenue account and the capital items to be shown in the balance sheet. Suppose such segregation is not made by us, there may be the chances of overstatement or understatement of profits, and our balance sheet will not show the correct picture of its financial position. See, for example, the acquisition cost of a building, it is actually capital expenditure and should be shown in the balance sheet as an asset. Instead of that, if we wrongly consider it as a revenue item and charge it to the profit and loss account may show a minimum profit because we are charging the cost of fixed asset to the profit and loss account in case of a trading concern or income and expenditure account of a non-trading concern. To show the true picture of profit or surplus or true picture of financial position, such segregation between capital items and revenue items is required. On the basis of nature of expenses and nature of receipts, we can divide all the items as revenue items and capital items. Revenue items are further divided into revenue receipts and revenue expenditure, and capital items are further divided into capital receipts and capital expenditures. Let us see the meaning and treatment of such items. Capital receipts. The capital receipts are the receipts or the amounts actually received regarding or on account of a capital item, say the capital introduced by the proprietor into his or her business, or the proceeds from sale of any of the fixed assets, etc. So these are all the items which are of capital nature. They are non-recurring in nature. I mean, such receipts are not repeatedly received by a concern. Therefore, they are called as non-recurring receipts or capital receipts. Which are all the examples for such capital receipts? As I said earlier, the capital which is introduced by the proprietor into business is one of the examples for capital receipt. Do we get capital in repeated nature? No. Only once or twice in a long life of the business, the owner may introduce the capital to his or her business. Then, amount received by way of loans. Do we repeatedly borrow loans for the purpose of business? No. It is non-recurring in nature, so that the amount received which is in the way of loan is considered as capital receipt. The amount received by way of deposits is also considered as capital receipt. And if we sell the assets, fixed assets of the business, may be tangible or intangible, the amount so realized will be considered as capital receipts, because we are not repeatedly selling the fixed assets which is purchased for usage in the business for many more years. Then sale proceeds of investments is also an example for capital receipts. So these are all the examples for capital receipts, because all such receipts are non-recurring in nature and the amount comparatively high. What will be the treatment of such capital receipt? Most of the capital receipts are liabilities, so that we have to show such liabilities in the balance sheet on the liability side. But few of the capital receipts are not the liabilities. See, for example, the proceeds from sale of fixed asset, whether it is a liability? No. Even the proceeds from sale of investments in shares or debentures, whether it is a liability? No. They are relating to assets, so that such receipts have to be deducted from concerned assets on the asset side of the balance sheet. So this is all about capital receipts. Then we can move to the next item, that is revenue receipt. Revenue receipt is a amount actually received which is of revenue nature. Say for example, sale proceeds of goods and any income received by a concern are considered as revenue receipts. The examples for revenue receipts are sale proceeds of goods, a trading concern which purchases goods for the purpose of sale, so that the proceeds from sale of such goods will be considered as revenue receipt. Then interest received on loans. Suppose we borrow loans, the amount received will be the capital receipt, but the interest received on loans granted by us will be considered as a revenue receipt, because all such receipts are of recurring nature. We are receiving interest annually on our loans. Then interest on investments. Even though we are investing amount in the shares or debentures or any of the securities, we are going to receive interest annually. So that this is a recurring receipt, it is considered as revenue receipt. Then if we deposit amount in banks, we are going to receive interest on our bank deposits. So such interest is also considered as revenue receipt. And if we let out any building on rental basis, we are going to receive the rent on repeated basis, so that the rent received on buildings or any other let out assets will be considered as revenue receipt. What will be the treatment of revenue receipt then? All such are considered as incomes. All the revenue receipts are incomes, so they have to be shown in the revenue account, which is a revenue account prepared by a non-trading concern, that is nothing but income and expenditure account. So all such revenue receipts should be shown on the credit side of the income and expenditure account of the non-trading concern. So I will wind up this session. I will meet you with the capital expenditure and revenue expenditure in the next section. Thank you.